What's up, Outliers? Welcome back to the Outlier podcast. We have a very familiar green chicken coming to hang out with us and talk to us really about the world. But there's a few things that are really high on my agenda with you before we get into detail. As always, hello, Doomberg and friends. Good to see you all. Thanks for coming back and hanging out for a bit.
Eric, always a pleasure to talk to you. We were just chatting before you hit record about your growth and success. Congratulations, well deserved.
I appreciate it. I think that's a very generous take, but I appreciate the sentiment. Speaking of growth, I actually figure that's a perfect place to start because throughout this year, at least from my lens, more of a trader lens, there's a lot of like broad themes that I noticed expanded and then some kind of fizzled out into nothing. If you were to look back over the year so far, understanding that there's still a month left, today's 1 December, but if you were to look back, what are some of the themes this year that you really think like grew in scope and really gained steam?
Yeah, it's a fascinating time to be an observer, and in your case, probably more so than us, at least in the public markets, a participant. I think obviously 2025 is the year of the AI arc and the whispers of a bubble in the public markets. We participate in the private markets. We happen to be founding investors in a small AI startup that we're heavily involved with, and we see what's going on in the private markets. It is, we've lived and invested privately in many manias, and this is certainly a mania. Doesn't mean that the world isn't going to radically change because of AI, or that huge amounts of money can't be made during a mania, but like all good traders would know, you have to know when to leave the dance floor. Our whole philosophy is to build businesses you're proud to own, and then if somebody comes along and wants to overpay for it, then you hit the bid. Just like, if you're owning stocks that you're happy to own, and if it rises too high, maybe you shave a little bit off. And so the arc of AI has been fascinating. We sort of had a little bit of the air come out of the balloon here. I would say, when thinking forward for 2026, the continuation of that arc, a lot of smoke around NVIDIA, Eric. A lot of questions being asked. Anytime a company is writing a memo to sell-side analysts explaining that it's not an Enron fraud, broadly speaking, that's a bit of an issue. The other arc, of course, has been the crypto arc. I think a big story is the Michael Saylor situation and his financial engineering. Some interesting investing opportunities there, I think. These preferreds that pay 10.5% look pretty interesting in a falling interest rate environment. But of course, the fact that finally, and I think correctly, the equity stack itself is traded below NAV is probably the market doing what the market does. It is a fascinating concept, what he's trying to do. It seems highly flawed to us. Signing up for perpetual dilution of the equity stack. In the long run, that's zero because all the Bitcoin goes to the prefers into the bondholders and less Bitcoin moons. So, at least he's totally transparent about it and has wonderful disclosure. Everything is by the books. I don't think there's any fraud going on there. But the Michael Saylor story and Jim Chanos shorting it, and going long, the classic sort of arbitrage trade going long Bitcoin, I believe he did. Kind of bit of an interesting one for us. And then the recent weakness in crypto as we end the year, coinciding with the weakness in AI, has a bit of, late 2007 type feel to it, if we're being honest, the last sort of big bubble that we can remember. So those are the two big arcs. On the energy side, I think, as we correctly predicted, all is well, all is calm. The long-term real price of all commodities is lower. And we did nail that Canada Carney call pretty good. We're publishing on that on Wednesday, a little follow-up, maybe a slight victory lap, and then a future set of predictions about Canadian energy as well.
Double-clicking into the AI arc, and more specifically the context of a bubble. It's really easy people tend to get nervy near market tops, even though the market spends the majority of its time within, 5% of all-time highs. Yeah. How do you analyze a true bubble and put your finger on it as, I don't just think that this is animal spirits, euphoria, aggressive growth, but like I actually think that this is a bubble.
Well, there's always a bubble somewhere. It's just human nature. So our whole philosophy is don't try to short them. Learn that the hard way, right? Don't try to fade them. Stick your hand out and grab some of the money. It's um, some of the best private investments we've made fed into the SPAC boom. I remember the SPAC boom was a legitimate bubble. It was a bit of a sort of a free money machine for a while because you could raise this money and pay people interest and put it in T-bills, and then if you found your deal, you found your deal. So our whole general philosophy is to build businesses you're happy to own because they cash flow. And then if a SPAC boom comes along and somebody wants to take something public at a ridiculous price, well, you let them. That's sort of the private markets. Now, on the public market side of things, when since we don't participate all that much in the public markets, I have a small YOLO account that I occasionally,
Hell yeah.
to do a little bit of action, and I'll talk about that maybe offline at some point. But nothing major, it's totally immaterial compared to, say, the size of the Doomberg business and how important that is to us. And by the way, we would never invest in things that we're writing about, and if we did, we would disclose it. So if you just go back and look at the 25-year chart of the NASDAQ, there's lots of bubbles between then and now, and look at the chart, So timing bubbles, if I was forced to be in the public markets, I would just dollar cost average in and, reinvest the dividends, buy a mix of, reasonable companies and dividend stocks and some growth stocks and set it and forget it. Unless you're a skilled trader, it's very difficult to time the markets, and trading is different from investing, of course, as you know better than anybody. Trading, as we were just, again, talking about before we hit record, is a combination of developing an edge and excellent bankroll management. It doesn't take much of an edge in the casino to make money, which is why card counting is illegal. But even then, when you're counting cards, you still have to manage your bankroll properly. And the house, of course, has an infinite bankroll, and you don't. And so drawdown risk, sometimes you just get a run of bad luck, no matter how good the odds are against you or for you. And so trading is a skill. I do believe, for example, that people can successfully trade for a living. People do it. It takes a special mindset. I personally don't have it. I could tell you what my 2 failure modes as a trader are, if you're interested. One is I'm a hunch and buncher. So I think I have a reasonable edge and I put too much on. And then the other is I just watch bad bets die slowly. And I'm not good enough yet at cutting those losses too quickly. But I know that. Yeah, I know that about myself. And so, only takes so many significant losses in your life to realize that maybe you should try to do something else, like what you're good at, like build a business. And so that's what I do with my time.
I think it makes obviously a lot of sense, especially the self-awareness side of it. Yeah, trading it's a fascinating thing. But
I mean, look, I can't fully give it up. I mean, it's kind of fun. There's nothing like the euphoria of a quick double on a call option, or but at the same time, you can't convince yourself that you're a genius and you should do this for a living either, unless you have a strong track record. Look, I mean, intellectually, I understand what needs to happen.
Right.
The translation of that knowledge into emotional execution is where 99% of the people who can't make a go of it fail, and I'm in that crowd.
I'm still glad you got the YOLO account. That makes me happy by itself. So that's good.
Yeah, well, I'll tell you some stats. It's been fun. Let's just say the Sharpe ratio on that is very low, even though the return has been great, because the volatility is pretty high.
But the fun ratio.
Yeah, I mean, it was an account that I found that had a couple of thousand in it that I actually forgot existed, and I'd just been YOLO trading it up. I got it very high, it came back down low. Now it's in a good spot again. It's
awesome.
fun.
Speaking of getting super high and coming back down, you mentioned Michael Saylor and MSTR, which has been really something to watch. And I'm near positive that you guys have a better handle on it than I do, because when I look at it, I really do get this genuinely feels like a Ponzi scheme thing going on, and not maybe directly, but parallels.
So it's not a Ponzi scheme because a Ponzi scheme involves subterfuge and fraud. And
I see.
I don't believe that Saylor is engaging in either of those. There's certainly
It's
no
fair.
evidence. And he has widely disclosed exactly what he's doing, which is essentially a levered bet on the price of Bitcoin.
Mhm.
Um, and openly sacrificing the equity stack to do it, which is the bizarre part. So, what do I mean by that? If you pull up your Bloomberg and you type MSTR F8CAST and you get their cap table, you see there's a bunch of bonds that are ahead of the equity in line. Now there's a bunch of preferreds that are ahead of the equity in line. Interest on those bonds needs to be paid. Microsoft itself doesn't really cash flow. The company, whatever it does, who knows what it does.
Sorry,
Always
you
wondered.
mean MicroStrategy, right?
Sorry, MicroStrategy. What did I say?
I heard Microsoft, but it might have just been me.
Probably. No, it's probably me. So MicroStrategy doesn't cash flow. Its software business doesn't really cash flow, certainly not compared to the volume of liabilities that are accumulating on the balance sheet. Now, on the other side of the balance sheet are the assets that are being procured with the newly issued debt and preferred stock. Preferred stock you could think of as basically debt. Um, the problem with this approach, leveraging your balance sheet to acquire an asset is this asset doesn't cash flow. So the only way in which this debt can be repaid, if it has to be, if it can't be refinanced, is to issue new stock perpetually, especially with the perpetual preferreds. Now, look, if you read the fine print, they could stop declaring dividends, but those things accumulate and they could pay them in stock. And, all the various instruments have different rules and nitty gritty that will come into play eventually. But if you just dilute in forever, you end up with what I call the AMC situation. The movie theater company, Adam Aron, famous CEO of AMC and the apes and all that stuff. So what has happened at AMC is he has totally Zimbabwe the equity. He's printing shares to service the massive debt pile when what he should have done was declare bankruptcy, recapitalize, and come out as a going concern. He's not choosing to do that because he says any value of the equity above zero is worth staying public for, but you're destroying huge amounts of shareholder value in the process. And so not zero is indistinguishable from zero with a big enough number in the denominator. And if you just look at the number of shares outstanding for AMC, that number is huge. It's literally many, 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 many multiples of what it was before COVID. When you capture all the dilutions and 10-for-1 splits and all that other stuff. So Michael Saylor, in a slower way, is doing the exact same thing to MicroStrategy stock, which is at the money, just did a $1.4 billion buffer that he claims will get him 21 months of interest and dividends for his debt stack. Okay, so 1.4 billion of dilution every 21 months. Now we know, right? And so not only do the holders of these instruments stand senior to the common in the case of a liquidation, they also basically can wipe out the company if it can't afford, well, wipe out the equity if it can't afford to pay its debt. So they could take it bankrupt. And then you'll get, if you're lucky, some of the Bitcoin value that's left over, assuming that the liquidation of MicroStrategy wouldn't crash the price of Bitcoin. And so it's a risky thing. It's not a Ponzi. It's very well disclosed. He is making a leverage bet on the price of Bitcoin, and if Bitcoin goes to the moon, he's fine. This is exactly what people who are investing in him want. It is unbelievably well disclosed. And so there you have it. In not zero, he's going to run the equity AMC style to quote not zero. And then if Bitcoin grows big enough, well, you have fixed liabilities and the equity gets the excess. So I get it. But that's the strategy that he's doing. So I wouldn't say it's a Ponzi, but I would say it is. If Bitcoin never reaches 100,000 again, how is that equity not a zero? When you play it out long enough. I mean, it's effectively a zero. If you look at like AMC stock has lost 99%, to me, 99% and 100% aren't really all that distinguishable.
And it leads to a follow-up, which I fully agree on not being a Ponzi. I think that's a good way to describe it. So I appreciate you walking through that. But I'm curious about if you were to ballpark a probability, it doesn't have like a specific number, but like a probability of liquidation in something like MSTR. Do you have any figures in mind? And if not, how would you?
Very low, very low. He actually, this is not well understood, I think. He never actually has to sell the Bitcoin. He could just print shares. Look at how many shares Adam Aron has printed at AMC. Look, once you're a meme stock, there's always going to be liquidity. Now, you have to be ruthless about it, and you have to care not at all about the people who are buying that paper from you. But he could print. He could print stock indefinitely and pay off the debt, keep the Bitcoin, and hope for a rebound. And that's what he'll do. My point is, the equity is like the weakest instrument in that whole cap table, Eric. And yes, you have that upside, but that upside keeps growing as he issues more dividends and buys Bitcoin at ever higher prices. It doesn't cash flow. The whole leveraging up to buy an asset that doesn't cash flow is a really unique experiment, and it's almost guaranteed to come at the expense of the equity. How could it otherwise? How is he going to pay the 1.4 billion that's due every 21 months that we just learned? That's before he does anything more, and so that has to come from the common.
I guess the interesting thing there, in my opinion, then, is if we think that there's a relatively low probability of liquidation, then that infers that we expect there to be perma demand for the underlying.
Well, I mean, how many months out of COVID are we with AMC, and they're still doing at the market after at the market? I mean, yes, once a meme stock, always a meme stock. There's always going to be traders. There's liquidity. You can do, all manner of financial chicanery. And look, there's no shortage of bankers on Wall Street happy to take a fee to help them do it. And so, yeah, I mean, look, the AMC traded 6 million shares today. I just pulled it up. No, it's not huge volume like it used to be, but it's still there. There's volume. You can do a VWAP and issue some shares. But yeah, like before, let's see here, before COVID, this is using Bloomberg. AMC had, I think, let's see, I'll pull it up. Like they have 500 million shares outstanding now. And before COVID, they had 15. So he's taken the share count from 15 to 500. And the best investment in AMC all along was the high yielding debt paper, which is going to get paid collecting your 10% coupon. You could have bought it for a much higher yield than that at its lows. And off you go. And so it's the debt holders who are going to win in AMC, not the common. In fact, just pulling up to see what the yield is on their securities. Yeah, like you're getting 11.8% yield to hold some paper that's due in 2029. There's no shortage of yield clippers that wouldn't mind a few percent of that in their portfolio. And he's printing stock to pay that coupon. And that's what Michael Saylor would do long before he would sell Bitcoin, because that would be a total and complete failure of the entire strategy. He would print shares of AMC and say, when Bitcoin goes to 10 million, it's not going to matter what your dilution is. But it's a fascinating situation. It's one of the most interesting market situations on the board. I follow it very closely. If for no other reason, look, I in a weird way, I admire him because he is going all in with conviction on something that he believes he has an edge on. Now, it's a shareholder's money. I'm sure he's a big shareholder. I haven't looked. I know he had been selling for a while. But he is an interesting person and wholeheartedly believes what he's doing. And so good for, capital markets, free markets, as long as everyone's aware of the risks and they're properly disclosed, which again, I give him full credit for. They're incredibly well disclosed. Go ahead, knock yourself out. It's interesting.
And then when you see like value below NAV, wouldn't that infer some sort of decreased interest in the underlying?
Broadly speaking, MicroStrategy is a closed ETF, right? And they always trade at discounts to NAV. And so what was unusual is that it was trading for a premium to NAV. And given his strategy, he was smart to sell as much stock as he could, because if you want to own Bitcoin, that means your stock is overpriced relative to Bitcoin. And so you'd sell stock and buy Bitcoin. He closed his own arb. What he did. But yeah, closed-end ETFs tend to trade for significant discounts. We saw this with the Sprott uranium ETF for a while. We saw this with various hedge funds that went public, like Bill Ackman's fund, I believe, traded at a significant discount at one point. I don't know what it's doing today, but when you can't, force the arbitrage, then you tend to get a discount. And so this is a more natural outcome, but it does limit his financial flexibility to buy more Bitcoin.
Well, can't wait to see how the story goes.
We're all going to get a front row seat to it. I mean, I don't know how it could go any other way than what we've laid out, but what do I know? I mean, markets are funny sometimes.
Yeah. And if you look across the market, what else just generally sticks out to you? I imagine there's got to be some interest on the energy side or even the commodity side.
Yeah. I'm amazed at how so few people realize that the long-term price of all commodities, long-term real price of all commodities is lower. We still get people pushing this whole peak cheap oil nonsense. We've laid it out in article after article after article, and we've had a pretty good run of mostly well grounded predictions that pan out, back to sort of developing an edge and having good bankroll management. At least we can provide an edge in the energy markets, we believe, and that's why people pay to subscribe to us. But like, just take, for example, the oil to gas ratio in the US. That number blew out to 55 when we wrote a piece called Generational Arbitrage, and on an energy content basis, the ratio of the price of oil expressed in barrels divided by the price of natural gas in dollars per million BTU, that ratio should be around 6. It traded up to 55. We pointed that out and said this has to close. We did a follow-up when it dropped down to 25, said this might even go below 6 eventually. And here we are today as we're talking, it's trading at 12. So Henry Hub natural gas times 12 is WTI oil today. And we still think it has further to go. That's because physics is a great edge generator. Physics says that heat is heat. Things that do the same thing can't sell for different prices indefinitely. Investments will be made to close that arbitrage, especially when it widens out an Icarus print like that, 55, a ratio of 55 when energy says it should be 6. And we're seeing that play out all year, slowly grinding. We've called on your show several times, I believe, that the equilibrium price of oil is 55.
Mm-hmm.
And here we are, peak oil still decades away, like fusion, and oil trading in the high 50s, maybe 60 for WTI. You can see where this has to go, and yet people are blind to it. So, for example, every historical market indicator that crude oil traders, retail punters like me and you, would use is invalid now because they're all backwards looking and they don't correct for technology. And in the US, oil and gas are produced together now. And so you have a classic byproduct situation, which again, people say, oh, what's the break-even price of crude oil in the Permian? And our answer is there is none. You have to know the price of gas too, because they're both produced at the same time. If it was $10 a million BTU natural gas, the break-even price of crude oil in the Permian would go negative because they'd give it away, just like they do with natural gas now. They produce them both at the same time. And so once this glut of natural gas in the Permian gets unstuck, and it will, because all arbitrages close, you could see a real headwind to oil because you have all this extra oil now that you're producing when you're producing natural gas for AI, for example. And that's a real threat to the long-term price of oil. So the commodity markets have actually been pretty boring because they're well supplied, and commodity markets are boring when they're well supplied and the price goes lower. If you doubt our view that the long-term price of all commodities is lower, just plot any of them in ounces of gold and see for yourself. So, probably the most exciting market this year besides AI and crypto, of course, has been precious metals and gold. And so we watch that pretty carefully too.
On those, there's obviously been a meteoric rise in gold and silver. And it's interesting because sometimes there's like a clear catalyst. Sometimes there's not. Sometimes it's a bunch of different things that cause a move. But one thing I've found so far, especially with metals, is there really isn't like a well-accepted consensus that I've come across in terms of why the move is happening. I imagine you guys have an opinion on that.
Depends on the two metals, of course, because I think they are different markets. And we follow gold much more closely than silver, just in full disclosure. But in the silver market, it seems like we're having a classic sort of squeeze on physical, and some people are standing for delivery, and silver's being moved around the world and getting a little funky, and squeezes can be very profitable if you're long, not so much if you're short, but at the same time they tend not to persist. The fundamental supply demand for silver, um, especially if solar is going to struggle under Trump, it seems to me long term not super bullish. But it's trading at what, 58 today. Good for my friends who are long it. Gold's a different story. I think gold is systematically replacing, or at least displacing, part of the demand for U.S. Treasuries as neutral reserve assets, driven by mostly the sanctions war and the freezing of the Russian foreign reserve assets, which has now, for much of the world, made those debt instruments no longer neutral. If the political whims of a U.S. president and can basically allow them to default on their debt obligations by not giving you your money back, which is what this is, then they're no longer neutral. They're the political weapon of Western leaders, and we happen to have a pretty volatile leader in the White House today. Love him or hate him, nobody would doubt that his call options on Trump would be expensive, if you know what I mean. And so the neutrality of U.S. Treasuries or European debt has been erased. I think that was a catastrophic blunder that history will recognize as such in due course. And gold, in order for it to play a role as a neutral reserve asset, needs a bigger market cap than it had. Who knows where it goes from here? One of the questions we ask ourselves, Eric, is who gets hurt if gold goes higher? The U.S. would want gold to go higher because they could revalue their gold and free up a lot of room for Scott Bessent to maneuver. People who own it don't care if it goes up. Who cares if it goes? Who cares if it goes to 10,000 or 20,000 or 50,000? In a way, and so not calling for those prices, but gold's an interesting metal, and I think it is, almost exclusively driven by the shock and reverberations of the sanctions war against Russia after the war in Ukraine started in 2022.
Speaking of the war in Ukraine, what do you think?
Wars are hard to lose. We've been on here several times with you. I know we've had a bit of a outlier opinion, but I think that opinion is proving to be mostly correct. The winning side isn't suing for peace, and so all of this talk about ceasefire on the freeze the lines and all that stuff, Russia, of course, is brushing all that aside. What I find fascinating is Trump's inability. Well, let me say it this way. Trump seems to care an awful lot about the opinions of people who obviously hate him, which is a fascinating thing. So the European leaders hate him. Starmer's leadership team came over here and campaigned for Harris. The neocons in Washington hate him. And yet, whenever he gets close to a deal with Putin, he gets talked out of it by a combination of the European Zelensky and the neocons. And perhaps he doesn't feel he has the political power to just say, I'm done with this. I'm washing my hands. Good luck with the war. But don't forget, Trump was impeached over Ukraine. There's no great fondness for Donald Trump. I bet you Zelensky was certainly based on the White House meeting, where he and Vance got into it. He certainly has no love lost for Vance. And so it is a fascinating situation. I don't know what Kushner and Witkoff are bringing to Moscow on this trip, because it sure seems like the Europeans and Ukraine have rejected this 29-point peace plan or whatever is floating around. And Russia is just slowly doing what Russia does, which is a grinding war of attrition, moving slightly from west to east every day, a new village, a new strong point. They have more people than Ukraine. They have more weapons than Ukraine. They have more money than Ukraine. They have more energy than Ukraine. And they're just going to grind away until they achieve their objectives. And so I think we're at this point where we wrote a piece a couple of weeks ago, you may have seen it, called Forcing Function. What I think ends the war is Ukraine is broke. The real dagger to Ukraine was when Trump stopped the money train. And the Europeans can't afford it. I think they're running a 100% budget deficit there. They're taking in half in taxes than what they need to spend, $140, $150 billion hole over the next couple of years. And that nobody wants to pay it. Certainly Europe's not going to pay it. There's no political support to pay it in the US. That's going to drive what I think will be a hyperinflationary crisis soon. And that will collapse Ukraine's ability to stay in the war, and they will have to sue for peace on worse terms than seem to be on offer here. Last point, I'd say, impossible to know what's really going on. There's so much propaganda, so much misinformation. The Europeans in particular flood the field with it. We read everybody's propaganda. I'll tell you without hesitation that the worst in the world is the British propaganda. It is unbelievable how much garbage comes out of the British mainstream press, overt lies, total manipulations. The British people are soaked in propaganda. Anytime we comment on this, we'll often get an angry subscriber or listener send us an email, and inevitably they're from the UK because our views are so different than what they see every single day in the newspaper, on television, that it's just they can't believe that somebody reasonably well educated would hold our views. When you read everybody's propaganda, you have a far better chance of understanding what's really going on.
What do you think of the perspective that the fact that the war really hasn't come to an end yet is actually positive for Ukraine? If Russia wanted to really impose its will, it seemingly could, but hasn't.
Yeah, we just did a doom zoom on this called World War III, how we got here and where we're going.
I forgot about doom zooms. I just love that so much.
Well, we love it too. It's a great little side business
that we've
got going on here. Yeah. So that was like a 50-minute presentation where we walked through, from the year 2000 to the war in Ukraine, and then the war in Ukraine, and then where we're going, which we believe is multiple wars in the Western Hemisphere. To sort of give you the punchline. So even the way the war is described is wildly different. So in Russia, Putin and his leadership described this as a special military operation. They have not gone full mobilization. One of Putin's objectives seems to be minimal disruption of the everyday life of Russian citizens. We have friends who know people in Russia, and they tell us that, to those people, not much has changed. Yes, it's not McDonald's anymore. It's got a slightly different name, but there's still hamburgers there. And, they still have, it's not Starbucks anymore, but they still get very good coffee served by the same people. And if you read Russian propaganda, and we do, nothing wrong with it, I read Ukrainian propaganda too, you will find, contrary to what people believe in the West, open and sometimes harsh criticism of Putin for not being aggressive enough in the war in Ukraine, being too worried about, is Donald Trump somebody you could even cut a deal with? Let's just finish this thing militarily. Let's pull up another 1 million soldiers. Let's go full war footing. And he has resisted that. And in fact, if there were to be a regime change in Russia, it would come from the right. And you would get somebody like a Medvedev instead of a Putin, who is either play acting or, is doing his best Trump impersonation on Twitter. But there's a strong feeling in Russia that Putin is playing this too slow, and it's coming at the expense of Russia. And that, in fact, the red line that was crossed in November when long-range Western-based missiles were launched into pre-2014 Russia, he was muted in his response, anticipating that Trump would soon return to office and that Trump was someone with whom business could be done. And so all this talk about, Tomahawk missiles kind of put Putin in a bind domestically, and that's why he came out publicly and said that the response to such a escalation would be, quote, overwhelming, which is unusual for him to say. Now, if you're Ukrainian, none of this sounds familiar to you because you're living, under bombardment. Your energy sector has been, severely damaged. Your thermal water systems, which are critical for winter heating, have been, severely damaged. Again, we think this is obvious war crimes. You don't need to attack the heating system of the civilian life in Ukraine to achieve a war aim. But nonetheless, all wars are basically criminal in our view, which is why we're so violently opposed to them. But nonetheless, the way in which Putin describes the war versus, I remember in the early days, because we were kind of critical of John Kerry. He was the climate czar back then, and in the early weeks of the war, he was openly worrying about the climate impact of the war, which seemed rather silly. But he said, the West in the European media describes this as a, quote, unprovoked total war of aggression. And so if you think this is an unprovoked total war of aggression, then the relatively slow grinding move from west to east that Russia has achieved seems like stalemate, seems insufficient relative to the disparity between the two powers. If you're Russia, you're trying to liberate these four regions. This is the language they use, not my language. And they've got 100% of one and 80% of another one and 75 to 80% of the other two. This, of course, is the Donbass, which is two regions, and then Kherson and Zaporozhye. I've never thought I would learn these places on the map, but because we follow the war every day, I've come to. And so if it is a special military operation with a limited deployment of treasure and blood, and every day the field tilts ever more into your favor, the belief inside of Russia is, of course, that wars of attrition are won suddenly. And the Ukrainian army is, by many reports, nearing exhaustion, fighting heroically. The biggest victims in all of this are the people of Ukraine. I mean, let's be honest, the country will emerge from this crisis destroyed, which is one of the great tragedies of our time for sure. But again, the propaganda, you have to sort of read all sides. Last thing I'll say, next time there's a big global world-beating news story, like that dominates the global headlines, a great exercise is to read how 8 different countries are framing it. You'll never look at the news the same way again. So read how China frames it, how Israel frames it, how Iran frames it, Russia, Ukraine, Britain, US, Canada, Mexico. Just take 8 countries. Go read the English language version of their most popular newspaper and see how they're covering the story, and your mind will be blown. You will then have a visceral appreciation for the bath of propaganda that we're all swimming in.
It's a really curious opinion, and I appreciate you going into the nuance of it, just because it seems like if Russia felt confident enough in their ability, that we would have more of a Crimea, where happens, it's done, and then they get what they want, and they move on. So I have a slightly different perspective on how it's gone out, but that's neither here nor there.
Well, let me explain that, because Crimea is 90% Russian, right? Voted, as we said in this. So the first thing that we try to do when we analyze situations that are steeped in propaganda is let's find some indisputable data that everyone agrees is not manipulated. And so for this, the data we settled on was the results of the 2010 election in Ukraine by region. And there were 2 candidates in that election. One was pro-Russian and one was pro-European. This was the great debate. I read with fascinating interest over the weekend a 2014 article published in the Washington Post by none other than Henry Kissinger. And when you read that article, it's pretty fascinating. He's pretty prescient. Crimea, historically, is Russian. Like 75 or 80% of the people that live there speak Russian. They voted in huge waves for the pro-Russian candidate. And on the other side of the country, they were voting 90% for the pro-European candidate. So when you look at that map of outcome by region, heat map, red, Russia, blue, Europe, it looks like a country on the verge of civil war. Now, Crimea, they were welcomed. And then between 2014 and 2022, Ukraine, with NATO's help, built a whole bunch of fortifications along the other 4 regions. And these are the formations that Russia is slowly grinding through today. Whereas Crimea did not have such fortifications, and the Russian army was mostly welcomed. And so that's the big difference, I think, is the time between 2014 and 2022. That's 8 years to build up an army, to build up fortifications, to inject a bunch of weapons into Ukraine. There was a civil war in the Donbass, as I'm sure you know, before 2022. There was shelling going on, and they tried to separate, and there were violence on both sides, and civil wars are messy, and I'm not making a judgment call. I'm just observing that there was a civil war going on. And so in those 8 years, Crimea, if Russia had wanted to go into the other regions as well, I think they would have found it a much easier thing back in 2014 than it is today. And again, if you're Putin and you're worried about minimizing your casualties, then there's a certain way to go about things. So anyway, that's our view.
Yeah, which is interesting because I find the ultimate irony is the longer it goes on, actually, overwhelmingly, the more casualties they face.
This
So
is
there's
the argument inside of Russia. Yeah, exactly. Like, let's just rip the Band-Aid off, right? You're actually articulating the argument on Putin's right.
well, I think of it just in context of the decision making cycle, because at least the way that I look at it, there's likely a series of reasons why Russia and specifically Putin hasn't come in heavy handed. He's not a soft guy. I don't think he's looking at this like, let me try to do this with a soft touch. That's never been his style. So to me, if there was an overwhelming capability to do this entire war in a week, even if it's a bloody week, it will still be way less bloody than years of this thing going. So
Yeah.
to me, the fact that he hasn't done that is actually very, very telling in terms of his perception of his position.
Well,
I think if
there's
he,
also, sorry, go ahead.
I was just going to summarize with, I think if he thought he could get away with it, he would.
So I think you're forgetting a couple things.
Yeah.
Russia has a huge military industrial complex, just like the
Mhm.
US, and there's probably a whole bunch of people in Russia who've gotten very rich from this war. And when you're in the bomb making business, peace is a working capital problem. Just like Ukraine, just like the US, there's probably a significant amount of corruption in Russia. Um, Bomb is a rich person's, war is a rich person's racket, man. Like, there's an enormous amount of money being made in the US, in Europe, and in Russia over this war. And it's mostly being fought in former Ukrainian territory, not in pre-2014 Russia. And so, there's entire industries that have been spooled up. Taxpayer money has been funneled towards it. And like you say, undoubtedly many fortunes being made, unfortunately, on the backs of the soldiers who are actually fighting and dying for this war. And so that's just one of the tragedies of life. Like, look what's going on with Venezuela. Like, okay, we're not going to do Ukraine anymore, and we got to keep the neocons happy. So let's go get a war going, in the Western Hemisphere. It's hard not to be cynical, but such a mental model works. And, if it works to predict future events, then it's a useful one.
Yeah, it's super interesting. One last question on that, then I want to pivot to something else. But if you think it's about money, which don't disagree, war obviously is a massive, massive revenue generator, then why this structure for this war? I mean, realistically, they could have had an even easier time executing a similar strategy in Crimea, even though Crimea itself as a populace was more welcoming. That doesn't mean Ukraine as a country was willing to just let them go. So they could have waited for resistance and then spark a war there to, drive revenue for a while, probably on an easier structure because it's not as defensible. So they could have just been equally as slow.
So if we go a little bit deeper into the sequence of events, when the war first started, Russia made huge moves. Right?
Sorry, just the current one, not Crimea.
Yes, okay. The current one, the 2020. Soldiers outside of Kiev. Zelensky kind of panicked. There was a deal on the table. It was negotiated in Istanbul. It was initialed by both sides. Who knows the full history? But as it's told now, Boris Johnson famously flew to Kiev and told Zelensky not to sign that deal, and that NATO would give Ukraine all the weapons it needs to inflict a, quote, strategic defeat on Russia. So I think Putin was surprised at the scale of the military supplies and other assistance being fed to Ukraine. And so Russia moved very far, very quickly, and then it got pushed back quite far, actually. And 2022, 2023 was about Ukrainian counteroffensives. And in late 2023, the large Ukrainian counteroffensive was defeated by Russia. It failed. And then since then, because I follow these maps every day, it's been a slow grinding one-way traffic from west to east, where a war of attrition has been fought. But I think Putin, in Russia, this is what they tell themselves. We are at war with 27 member states of NATO. Now, as we said in our Doom Zoom, not all the best weapons were sent, but they were sent in volume. Hundreds of billions of weapons were sent. Challenger tanks, Abrams, how, F-16s, of course, not the F-35s, but F-16s.
Mars.
Yeah. You name it. Pretty good state-of-the-art weapons were sent in volume, and lots of quote unquote mercenaries fighting over there, and so on. But you're never going to win a logistics war against Russia from over here, especially when your logistics depends on China as much as it does. And China has clearly picked its side in this conflict. It is feeding an enormous amount of resources to Russia, helping with drones. We don't doubt for a second that Russia is sharing everything it's learned about these NATO weapon systems with China in anticipation of a potential conflict in Asia. And so it is absolutely true that Ukraine has fought heroically. They've had enormous assistance from the West. All in, 400 billion euros is, when you add it all up, it's a lot of money, Eric. And Russia, as large of an economy as it is, and as a commodity powerhouse as it is, still had to spool up, had to reorient. It is just now cranking out drones. They say 1,000 a day by the end of the year, of these large Duran drones, I guess they're called. And so what we're seeing now is an attack on Ukraine's energy grid, the likes of which we haven't seen, an attack on the thermal water grid, and attack on the rail network. And so it is, again, sad. By the way, I wish, for example, that the Istanbul Agreement had gone through, and war at this scale and for this length of time could have been avoided. Back then, it was just two regions, by the way, Lugansk and Donetsk, the two regions that make up what people call the Donbass. And now it's four. And the Russians say that, if they conquer the four and Ukraine still keeps fighting, then it'll be six, it'll be eight, and they'll eventually just take everything to the west of the Dnieper River, including Kiev. I doubt they can do that without going full mobilization, like you and I talked about earlier, but that's what's being said amongst each other in Russia, on Russian television and Russian newspapers.
It's incredible. Like, the whole thing is absolutely fascinating. It's a really, really interesting play on a lot of human factors, which in obviously the cycle of war is just everything. So
yeah, look, if the first Gulf War was the first television war, this is the first internet war. And that's the thing that's amazing about this war is you and I can spend an hour a day going through open source intel and see what's going on, satellite images. So there's all these mapping projects, right, that are trying to map the line of combat contact. And there's three varieties of them. There are those that come from Ukraine, most famously Deep State, for example. There's plenty of Russian mapping projects, and then there's a few that try to be neutral. And the thing is, they all kind of self-check each other because you can't be too far off the consensus. Otherwise, everybody knows what your bias is and that you become an unreliable project. And so you could Google Deep State map, and you could, do a time series. There's all kinds of time series of the map. And there's one on YouTube, which I'll pull up, if we keep talking about this. But there's one that puts a daily map of the entire war from 2022 to today, at once a month. So the December one will come out on December 1st. And you could just see, you could follow the initial wave of Russia going in and then slowly beating back by the Ukrainians, and then it stops, and then it stays pretty steady for a long time, and then now it's starting to move back. And these are the sort of consensus views of all three sides. And so it's kind of hard, like, when you see what's going on, to then not read propaganda for what it is. And so you can find all manner of stuff. Now, that doesn't mean that it'll be true. You have to develop sources that you begin to think are reliable and trust over time. But even bad propaganda is good intel. What the British are telling themselves is a data point, especially if you've become skilled in the art of reading their propaganda. And so that's where we are. I think our view still is that there is no negotiated settlement. This will be settled militarily. Terms will be dictated, and one side will capitulate. Probably pretty obvious who we think that side will be. But there's no world in which Putin is going to compromise, or Zelensky could accept Putin's demands. And so when you have a stalemate like that, then you just, as Trump says, have to let them fight it out.
Well, I always really appreciate your perspective, and thank you for exploring it with me. The definitely differences in general nuances, but I think the general consensus is pretty aligned that war is hell. So,
oh yeah, 100%. Yeah. Look, we are wildly anti-war. for this very reason. Who wins in this war? Nobody wins. The Russians don't win. The Ukrainians certainly don't win. The West doesn't win. Europe has bankrupted itself. The U.S., neutral reserve asset status has been severely damaged. I mean, there's no winners in this. So Russia gets to occupy 4 regions that have been bombed out. Okay, now they got to spend to rebuild those. The winners, of course, are the military-industrial complex and all the people that make money by building bombs. But don't count me amongst them.
Depending on how the war concludes, regardless of the way we arrive there, what would your opinion then be on gas going from there?
Natural gas?
Yeah.
The real-time price of all commodities, the long-term real price of all commodities is lower, and gas is no different. We arrive at our equilibrium price of oil of $55 by taking $10 landed LNG. It's under that today now in Europe. Gas is cheap. LNG is cheap. Still more expensive than pipeline gas. But long-term gas gets cheap in real terms, always. As more and more pipelines are built and midstreamers reduce the friction of bringing the gas to market, supply is basically infinite. And so, lower. I mean, we're pretty much at equilibrium price now. Landed LNG can't go much lower than here. And people in the supply chain still make money. And so that's kind of we might punch through this floor, but then if you go low enough, that might be a buying opportunity because it has to come back to that equilibrium price. We arrive at that equilibrium price by saying, $4 a million BTU in the US is great for local drillers, and then tack on $6 to get it from there to Europe, and you get 10. Everybody earns their cost of capital at that price. And so that's how we arrived at our $55 equilibrium price for oil that I mentioned earlier, and that's been a pretty reasonable physics-based market edge to have in the back of your mind.
Makes sense. And I want to be thoughtful of your time. I had one more question for you. Sure. Looking out at 2026, it seems now more than ever and increasingly so, energy continues to be center stage. And obviously, your guys' work, it is primarily all trickles back to energy. But if you look out over 2026, are there any surprises that you expect might come with respect to energy?
Yeah, I see political revolutions all across Europe in the aftermath of the war, assuming the war comes to an end. Wars are hard to lose. Europe went all in. When you go all in and you lose, you have to suffer the consequences. I could see political revolution in Germany, for sure. Perhaps the collapse of the EU itself. Nowhere in the world is there a more sorry batch of political leaders without skill than in the European Union, and I would include Britain in that regard. I think Britain, frankly, is a failed state. Could see civil war in Britain. It's coming pretty close to that. I was just reading today on Zero Hedge that somebody got arrested for posting a photo of themselves with a gun while they were in the US on social media. They went home and they were arrested. Did you know that Britain has arrested 12,000 people for online hate speech, they call it? This is not a free country anymore. You have a leader who's at 10% popularity that can't be ousted till 2029, except from within his own party. They're drowning in debt, running big deficits. They brought in a huge inflow of immigrants who are taxing the system as well. And so it's hard to see, Britain, how Britain will emerge from 2026 will be interesting. Let's put it that way. So again, all depends on when the war ends. I think there'll be a huge reckoning once that war is over and what has actually been going on there becomes more widely known. There's a huge amount of propaganda, of course, the thicket of propaganda on the whole campaign. But watch Germany, political revolution in Germany, the European Union itself, and then Britain. We're mostly interested in Europe because that's the biggest disruption to energy flows that caused the energy crisis that was ongoing when we emerged as Doomberg, and so we always watch it very carefully. That's probably most interesting. And then the last thing I'd say is obviously 2026 is going to be the year of war in the Western Hemisphere. Venezuela is just the opening act. I would see regime change in Cuba. These protests in Mexico have all the hallmarks of a Western NGO color revolution attempt on Mexico. tensions with Colombia. We're about to see the Trump of Chile elected. Milei, of course, is in Trump's camp. So if you just go up and down the southern part of the Western Hemisphere and bluntly put people into pro-Trump and not pro-Trump buckets, the not pro-Trump buckets are going to be in for some tension.
One quick follow-up on the amount of turnover and overall strife that you first see in Europe. You touched on it really briefly. I'm just curious if you could maybe double click one more layer
Sure.
in terms of the impact that all of that turnover can have on the energy sector.
So Germany could turn back on the remaining Nord Stream pipeline. Pipeline gas could flow through Poland again, for example. There's, the way Europe used to run was cheap energy from Russia, cheap labor from Eastern Europe, and healthy export markets to China. All three of those are gone now, especially in Germany. And so the way you pivot from where you are to where you were is to begin to go back in that direction, right? Assuming the Russians would be willing to sell the energy to Europe, which is a whole different question altogether. And so they could make fracking legal. They could stop destroying their nuclear power plants mindlessly and turn a few of them back on. They could, the British could make drilling for oil and gas easier in the North Sea and not tax energy companies at 78% marginal rates. These are all policy choices that are choking Europe. And when you have a political revolution, what happens is the opposite of those choices become the policy. And so that's why we're watching Europe so carefully, because again, we in that presentation we just showed, the hydrocarbon production and consumption numbers by select region, right? And the U.S. North America is a net hydrocarbon exporter of significant size. So you just take coal, natural gas, and oil. How much does Mexico, Canada, and the U.S. produce? How much does Mexico, Canada, and the U.S. consume? That delta is what's available for export: coal, natural gas, oil. Russia's a huge hydrocarbon exporter. Europe consumes 38 exajoules of hydrocarbons and only produces 5, which is remarkable. The southern part of the Western Hemisphere consumes 20 exajoules and produces 22. So it's fine, it's balanced. The US is like plus 17 exajoules, Russia's plus 24, 25. And so you could see just this gaping hole in Europe's strategic economic positioning. It doesn't produce its own energy, so it has to pay the cost of capital for everyone else who does. And you can't have heavy industry. As we like to say, if you're not self-sufficient in energy, you don't get to have nice things. The only really chance you have is to be super high-end, like Taiwan is on semiconductors. So they're an energy vassal, but they made themselves indispensable to the global economy for now by being very, very good at producing high-end semiconductors and chips. And so it's in everybody's interest that Taiwan get its hydrocarbons. And because they're so far on the high end of manufacturing that they can afford to pay up, but you can't have steel plants and you can't make artillery shells and tanks and boats and planes when you're buying everything from China, because China could turn it off, as we're seeing with the rare earths, right? And it's just prohibitively expensive. And so steel is leaving Britain. Steel is leaving Germany. The auto industry is going to suffer big time. The chemical industry in Germany is devastated. Look, BASF existed at the other end of a pipe of natural gas from Russia, period. That's how BASF, one of the great chemical companies of the last 120 odd years, or if not longer, definitely longer, they've been crippled by this. Chemical factory after chemical factory is closing in Europe. Those will never be reopened. You never get permits to reopen those. And so, Europe will become, if it stays on the current course, a tourist attraction. A little more.
The Eiffel Tower is kind of cool.
Yeah, but look, I mean, it's beautiful architecture, sure. But you got to make
history.
Look, I mean, the U.S. listeners should be so grateful for the American oil and gas industry. It's actually the anchor of U.S. geopolitical power going forward. If it weren't for the shale revolution, the U.S. would be in a world of hurt, very similar to Europe. But thankfully, we've cracked natural gas. There's an infinite supply of it. We have hundreds of cogeneration facilities, which produce power and steam. that form the foundation of a still pretty successful manufacturing industry and the foundation for a rebirth of that industry that Trump is trying to execute.
Well, I have a list of notes for our next conversation because that immediately gets me interested to talk about nuclear power and stuff like that. But I know that you have chicken things to do. So
yeah, mostly I got to take my afternoon nap. So
yes. Well, you have a very specific, it's not, you put it lightly there, right? It sounds like, yeah, I just like to take a nap, but like you have a very specific sleep cycle. So yeah, it's not like a casual, this is like really important for you to keep on this cycle.
Yeah, it coexists with our writing cycle, which, as you know, it's hard to produce, 2,000 words, research, write, edit, publish, promote, and defend 2,000 words every 4 days. Means you have to be pretty disciplined with your time. Mix in all of our podcast appearances. This is why we have a no meetings lifestyle where we just don't accept outside meetings and other than podcasts, and we just focus on feeding the beast, as we say, wake up, show up, make the number go up and repeat.
I love it. Thank you sincerely for sharing your perspective and taking the time to go through some of the nuances of this stuff. One of my biggest hopes for people that listen to our podcasts is exposure to different opinions, ideas, and how to think about the world. And I think you provide a really, really great framework. Sometimes people will get a little angsty about some of the takes, which to me is always they missed the boat in that scenario, and they're focusing on the wrong thing. So thank you for what you do.
Yeah, two things real quick.
Yeah, please.
The only thing worse than being wrong in this business is having no opinion. That's one. And two, we never get offended by authentically held views politely expressed. And so our brand ambition is that you will get our authentically held views and we will express them politely. And if that angers you, that's a you problem, not a me problem or an us problem. And so I really appreciate you having me on. I always enjoy our discussions. You find everything at Doomberg.com, of course. Looking forward to the next one.
And actually, I'll throw a link to your website below. You guys have a bunch of recent paper that you put out. I see World War III, Cup Run Thunder, Closed Loop. You guys have just absolutely been on a tear with a lot of these topics more recently. So there will be a link to that for everybody. Is there anywhere else that you want to send anybody in addition to that?
Yeah, we have a second Substack, Classics Read Aloud, that a co-founder of Doomberg and its editor-in-chief has started in September. It's all about curating the best of literature and presenting it in the sort of the Doomberg brand. Very, very high production value. Really brilliant stuff. Shows you the depth and breadth of our team as well. And, building a new social media platform from scratch has been fun and challenging and interesting, and gives us a little bit of a throwback to when we first started doing the guerrilla marketing around Doomberg. Really great stuff. You can find it at the Doomberg page. We have a tab for it, or you can go to classicsreadaloud.substack.com. It's really great stuff. Eric, thanks a lot. Appreciate the opportunity to talk to you soon.
Beautiful. See you guys.